question. Does the video look a little small to you guys on my PowerPoint?
Yeah.
It does, okay.
Mhm. You need a couple more minutes to make adjustments?
Not necessarily. I'll just turn my camera off. I'm just big on people being able to see who they're talking to. And
Oh,
so for the time being, well, I guess I'll start without the presentation showing and then I'll reshare.
okay.
All right, cool.
All right, awesome. Good evening, everyone, and welcome to the Affordable Living and Supportive Services Forum. Today we have a treat for everyone, and we are with Deonte Austin, who's going to talk to us about home ownership. And are you ready? You might be ready, right? And if you're not ready, could be an opportunity for you to start putting some things in place. So, Deonte, welcome, welcome. So, tell everyone who you are, where you're from, your tags, and all of that.
All righty. So first, thank you, Melanie, for inviting me to your forum. I really appreciate it. I
Absolutely.
also enjoy seeing you do the work that you do. I can tell that you're very passionate about it.
Thank
So keep up the good work first. And thank you for everyone else who has decided to join tonight. Hopefully it is a treat for you guys. As Melanie mentioned, I am going to talk about the path to home ownership, how to overcome some barriers, as well as some additional information. And so again, my name is Deonte Austin. I am a realtor with the Washington Team Realty. We are a small brokerage located in Ellicott City, so Howard County. However, we primarily base our services in Baltimore City as well as the surrounding counties. We also provide business opportunities or services to Pennsylvania as well as Virginia. And so if you are interested in home ownership, we can service you in all three of those states. And if I'm not able to service you, I can always refer you out to someone who might be a better fit. And so, with that being said, I am from Baltimore. I haven't always lived in Baltimore. And so, tonight I do plan to share a bit about my personal experience with real estate, as well as tie in some of the professional pieces, because sometimes I feel like as realtors, we talk about the path to home ownership, but we never really share our personal story behind it. And to me, that's really important. And so I am going to go off camera just so you guys can see the presentation that I did prepare for tonight. I don't necessarily want to dominate the conversation, right? And so I do want this to be as interactive as possible. And so when I say that, if there are any questions that you guys have, please feel free to stop me because real estate can be overwhelming, especially when some of the terms might be new to you. So I'll do my best to make sure that I'm speaking in a way where everyone can understand. And because everyone's situation is different, I am going to try to be as general as possible, but there will be opportunities outside of today's meet. And if you wanted to meet one on one, we could do so. And so I'm going to go off camera. I am going to share my presentation and then we'll go ahead and get started. All right, so give me 1 second. And while I'm getting ready to share my PowerPoint, just out of curiosity, is there anything that you guys are looking to get out of tonight? And if you want to just take yourself off of mute or put anything in the chat, that way I make sure that I do my best to answer as much as possible. And so again, is there anything that you guys are looking to get out of tonight's session?
Well, Deonte, I'll speak on behalf of some people who I have engaged with, whether they're here, at this forum or not. Some folks that I engage with, they absolutely have decent enough credit and decent enough income where I think, and I'm not the professional, that they could possibly qualify for home ownership. And maybe taking like a deeper dive like into that, like what does that look like? What does credit, what should your credit look like? What should the amount of money that you have saved look like? Things like that. Because I think that would be beneficial for folks to really, get a good picture, painted. Like even if they aren't like per se ready today, they might be ready next year sometime if they keep on this same pathway.
Got it. Understood. So, can everyone see my screen? It should be the PowerPoint.
Yes.
All right, perfect. All right, so as I mentioned, I work for the Washington Team Realty. We're based in Ellicott City. One of the things that I do want to point out from this slide are our core values. To me, that's really important. So we believe in customer service and integrity as well as teamwork. And so again, I mentioned earlier that let's say, for example, if you feel like you are ready for home ownership, if I'm not the best fit for you, there might be somebody else that's best fit for you in terms of working with. And so I'm more than happy to connect you with that individual if you feel that, I'm not the best fit for you as your realtor, if you decide to even work with our brokerage. Here's my contact information. I am going to share this again at the end. And so I'm just going to breeze past this, but again, I'll share this at the end of today's presentation. And then I'll also have Melanie email it out to you guys too. All right, so as I mentioned, I wanted to start with my personal story to home ownership. And so I've been a homeowner for the past 4 years. And so I closed on my home in Baltimore City in February of 2020. It was actually right before everything shut down, right before COVID. I closed February 28th. And then 2 weeks later, I was sent home from work, and I've been working home from since then. And so I didn't realize that in 2016, my true path to home ownership started. And so I was one of those people who didn't necessarily think that I wanted to purchase a home. It wasn't something that I had a vision of. And so in 2016, when I first started working on my credit, it wasn't about home ownership. It was about having access, right? And so around that time, I had purchased my first car using a loan, so an auto loan, and my interest rate was high. My interest rate was probably around a 14%. And for me, I'm like, this doesn't make any sense, right? I can't necessarily afford to buy a cash car. I can afford a monthly payment, but my interest rate is causing my payment to be a bit higher than I would like it to. And so I told myself, I said, you know what? I'm going to start working on my credit. I believe at that point in time, my credit was around, it was probably in the 500s. And so, really, over the next 4 years, so from 2016 to 2020, I was truly working on my credit to make sure that my credit was in much better standing. And so in 2016, I opened up my first credit card. I don't know about you guys, but the only true knowledge that I had about credit was if you mess it up, it can hurt you, right? I was always told that if I can't afford something in cash, there's no point in having credit. And to me, that's kind of a backwards mindset. And I know that, some people do believe cash is king. While it is king, credit is also king because it provides you access when you don't necessarily have the credit, right? And so in 2016, opened my first credit card. 3 years later, 2019, I was able to work on my credit. I did it myself. I do know that one of Melanie's components of the resources that she provides is credit restoration. And so if you're not able to work on your credit yourself, I highly advise you to be able to have somebody else help you or assist you with that process. Long story short, over the course of those 3 years, I went from low 500s. And by the time I applied for my mortgage, so a pre-approval for my mortgage, my credit score had reached a 760. So I had almost a perfect credit score before I started the home buying process. And even a month before I started the home buying process, I wasn't in the mindset of purchasing a home. The reason why I decided to purchase a home was because my partner, he purchased his home in 2017. And when he purchased his home, he decided to house hack. And so I'm sure you guys have heard of the term house hack. Essentially, he was living in his home and he also had two tenants. And so his two tenants were essentially paying his mortgage and a few other bills. And so I said, if he can do this, I can do this as well. At the point in time in 2019, I was living with my mom, saving as much money as I could. But I also wasn't necessarily making a lot of money. And again, I'm pulling from personal experience. At that time, I was making around $60,000. And so I said, if I'm going to go out and rent an apartment or rent a house, more than likely I'll be spending at least $1,300 for a 1 bedroom. And to me, that didn't necessarily make sense, knowing that my partner had a 4 bedroom home, 2.5 baths for around $1,000, so $1,100, for example. And so I had connected with a realtor, one of my childhood friends who I knew was in the industry, and I let her know that I was interested in purchasing a home, but I was very specific about my needs. I told her I did not want a mortgage more than $1,100. And so that was important for me because I did not want to be house poor. And so that's one of the things that I do want to talk to you guys tonight about is finding a budget that's most appropriate for you and your financial needs. And so while I could have afforded more than an $1,100 payment, I did not want to go above that number because I knew my income was going to increase, but I also wanted my expenses to be as low as possible. And so again, starting at the end of January of 2020, I went out house shopping for 1 weekend. I made my mind up. I purchased a home for $155,000. At that time, interest rates were a little lower than they were now. And so my mortgage payment ended up being $1,078. Fast forward 4 years later, property taxes have gone up on my property a little bit, but I did get private mortgage insurance removed from my mortgage payment. That might sound like a term that you may not know about, but I'll explain what that is later. And now my mortgage is $1,030. So I have a 3 bedroom home, three full baths, and it's a semi-detached home, and my payment is only around $1,000. The first 2 years that I lived in my home, I house hacked. And so I had two tenants as well, two of my best friends, probably not the best decision, but they were paying for my mortgage as well as for um, a few other bills that I was able to pay for based off of the rent that they were paying me. And so for 2 years, I didn't have a mortgage payment because they were covering that in their rent. It allowed me to save money. It allowed me to get ahead in some ways. And so at that point in time, I didn't necessarily think that home ownership was me for me, especially in 2016. But fast forward to 4 years later, when I finally decided to purchase a home, it worked out perfectly for me. Again, my credit score was around a 760. However, everyone's credit is not going to be around that amount, and everybody's reason for purchasing a home is going to be much different. And so before I transition into anything else, I want to see if anyone has any questions because I know I just shared a lot. So I just want to stop to see what questions do you have about my personal experience with home ownership.
I have a question.
Yep.
So I just filed a Chapter 7. Do you think that this is even a class that I should be even participating in as of right now? Because my Chapter 7 is freshly new, like within the past couple of weeks.
So I think that it's still important information. The reason being is because even though you filed for Chapter 7 bankruptcy, there are still some things that you can do right now to get ready for home ownership once you get that I think it's called the what is the
Courts.
exactly. So there's still things that you can do now. So I mentioned that I didn't purchase a home until 2020, but my journey really started in 2016. And even though during that 4 years, home ownership wasn't necessarily on my mind, I was building my credit to get to a point where if I did decide to go into home ownership, I had the credit score that was needed. I was also saving money, probably not as much money as I should have saved, but I was at least saving some money to be able to help me with some upfront cost that's needed in order to buy a home. And so all that to say, I still think this is applicable because there are some things that you'll learn that you need to know about the home buying process as well as how to get ready for that process.
Okay.
Other questions?
Ayana has a question.
Go ahead, Ayana.
Good evening, everyone. First and foremost, my question is: I'm currently working with Video. They have been helping me to get the, I guess, the collections that's on my credit off. And by paying off not all but some of it, and then every month or so he does a soft credit check on my credit. So I'm a current student, and now my college loan is showing up on my credit, but it made my credit score jump, right? But my financial aid counselor said that my first payment due until I think next month. But my patio financial aid counselor for buying a house told me if I have the funds to go ahead and pay it now. For a person that has already gone through this process, um, do you think I should start paying now on it, or should I wait until the bill is actually close to being done and then pay it on it? Because I get the saving, and you still have bills that need to be paid on a month-to-month basis. So my question is, like, how did you manage the both of it, especially with tuition, school bills, and children?
Yeah, very good question. And so in this slide, it says home ownership is attainable and everyone's journey is different. And so just from what you just described to me, your situation is much different than my situation when I was going through the home ownership process. And if you don't take anything from tonight's call or conversation, is that no matter how you get to home ownership, it's attainable and everybody's situation is different. And so when it came to student loans, I did have student loans, but the good thing, not necessarily good thing, but one of the things about student loans that people don't realize is that it doesn't count towards a lot of your debt to income ratio. So when I say debt to income ratio, this is a term that loan officers, so professionals who are helping you obtain your mortgage, so they work for the mortgage company, they essentially take a look at your income, they take a look at your debt, and a part of that debt is student loans. That student loan debt only counts for a very, very small percentage of your total debt to income ratio when it comes to purchasing a home. And so that percentage, I don't have the exact number off the top of my head. Let's say, for example, it could be 0.002%. It's such a small number. So even though at the time when I was applying for my mortgage, I had about $70,000 in student loan debt, only a very small portion, maybe $50 counted towards my debt to income ratio. And so all that to say, did you say Fabio?
Patio.
Patio, I'm sorry. If Patio is stating that they think it's best from their professional standpoint, that it's good for you to pay it off ahead of time. If you can afford it, I would follow their recommendation because they're the professionals in that credit repair space, right? I'm the professional in real estate. I do have my personal experience and professional experiences, but when it comes to the numbers, I lean on my business partners. So, for example, I'll lean on a loan officer, or if I'm working with a client who is in credit repair, I'm going to lean on that credit repair specialist. And so, if they're saying pay it off, and if you can afford it, pay it off, right? If you can't afford it, then that's a little different. You have that conversation and let them know this is what I can afford now versus later.
I think that's where he was hitting with that. He was like, if I have it to pay it, I should just go ahead and pay it. But the next question I have is because the real estate agent that I do have now, I do have Beyonce taste with middle class money.
Okay.
So she said that I may not get, quote unquote, I may not get the house that I want, but at least I'll be paying towards a house for me to own versus then paying someone else rent, which I understand that.
Yeah.
Especially with the market being as bad as it is right now, and then the interest rates being what they are. But I think Patio was looking at it from an increase from credit, because when I started my journey, I was like a 410, and now I'm 593 and up. So I've came a long way in a little bit of time. So I will say I can see the difference and I understand exactly what you're saying. But if I buy a house, like, did you get the house that you wanted, or did you have to settle for something that was smaller or more quaint than what you wanted to? And more importantly, would you ever like refinance or sell so that you could get something new?
Got it. So that's a very good question. Before I answer that question, I want to say I was a first-time home buyer at that point, obviously. And sometimes as first-time home buyers, we want the dream house. And the dream house might not be realistic, right? It might not be affordable. But I wanted a home that I could afford and a home that I liked. So I don't think I settled at all. My mom, godmom, other people might have thought I settled because they didn't like the location. They wanted me to move to the county. But at the end of the day, are you guys helping me towards the purchase of the home? No. Are you guys helping me with a down payment? No. This is my money. I'm an adult. I'm going to make the decision that's best for me financially, as well as keep my safety in mind. And so I knew going in that I wanted a home that had exposed brick. I wanted a home that had at least 3 bedrooms and at least 2 full bathrooms. I wanted a home, even though I had those expectations, I also wanted a home for at a payment around $1,100. And so I wasn't looking at any houses that was going to push my payment above that. And so I got exactly what I wanted, but also keep in mind, interest rate was lower. Today, my house has over 100K in equity. And so let's say if I were to purchase this home today, the payment would be much higher. And so with that in mind, I probably would look at a different house because it doesn't necessarily fit where I want my mortgage payment to be. And so to answer your question straightforward, I don't think I settled. I got exactly what I wanted for the amount of money that I wanted to pay and some of the basic needs that I wanted in a home. Would I sell today? To be honest, heck no, because of the equity that I have. And I know that I can rent it out for at least $1,800, $2,000 and pocket, $800 because my mortgage is only $1,000, and so I definitely wouldn't rent it out. I would definitely upgrade at some point. But I'm just not there yet. I'm riding this wave where my mortgage payment is lower, and so does that answer your question?
You did, and I have one more. I'm so
Yep.
sorry,
Oh, you're fine.
My last question would have to be, and I know you said that you got the roommates. So when you did that, didn't you have to follow the Maryland state laws as in becoming a landlord, because technically you would be a landlord, or did you just uh find a phony a lease or something online and just did it that way?
I created my own lease based off of some things that I found online. So I didn't register my property as a rental property. I looked at it as family or friends living with me, and I'm just collecting money under the table, essentially.
Okay. And with that being what it is, how do I say this politely? I don't know. But when you follow the process, and let's say you went through all the steps, you went to the class, the first time homeowners class, did you get any like grants that went along with it? I know they offer first time homeowners $10,000. I don't know if you have children, but did you get like the disability grants for the kids? And if so, because there's a lot of mothers on here, how do we like apply for that? And other things that help us, like the trolley rides and some
Yep.
other things that I heard of. And then like I don't know what I want interior-wise. I know what I want exterior-wise, if that makes any sense at all. Like
Yep.
I just want a semi-detached house that's in a decent neighborhood, and I'm not next to 15 vacant houses. Like that's my dream home right there. And so when I'm asked these questions by my real estate person that I'm working with, they don't understand what I'm saying when I say that. They keep asking me about pretty cabinets and some type of name brand chandelier that I don't care about that part of it. I really care about neighborhoods, maybe a backyard so my kids can play. I think when I'm thinking about am I ready for purchasing a home, I'm thinking about what's going to consist outside of that home more so than what's going to be on the inside. I mean, as long as there's enough rooms, I don't really care.
Yep. So you just said a mouthful. So I'm gonna address hopefully everything that you just mentioned. And first, I just want to say good job with increasing your credit score. From my personal story, I know it's not always the easiest, and so keep bringing it up. And that also ties into what you were asking about in terms of like grant programs that's out there that you can take advantage of. Before I talk about that, one thing that you also mentioned is location is important for you. You have children. And so while the interior, you want it to be a stable home, the exterior for you is important because of the safety of your family. And so no matter what real estate you're working with, obviously, depending on budget, there might have to be some compromise and things that you might have to consider, but you can always change the interior of a home. You can never change the location of it. And so just keep that in mind as you're going through the home buying process, because to me, it sounds like to you, location is one of the biggest factors for you because of the safety of your family. Secondly, I did use grant money. It's a program called Maryland Mortgage Program. This particular program gave me $5,000 towards the purchase of my home. That particular program, it does have more strict credit requirement. And so I think at the time, if I'm not mistaken, I had to have at least a 660 or a 680 and above credit score in order to qualify, if I'm not mistaken. But again, my credit score was at a 760, so that wasn't necessarily the issue. There are also some income restrictions for the program. And so I didn't max out of the income restrictions, if that makes sense. So that 5K did help towards my down payment. Okay. There are a lot of down payment assistance programs, as well as closing cost assistance programs out there if you qualify. When I say if you qualify, it's based on, a lot of the programs are based on your income and your credit. Okay. And so that's why credit is really important. I forget the young lady's name who asked about should she be on this call. This is some of the information that some people might not be aware of, but this allows you to prepare for when you are truly ready for home ownership. And to be honest, down payment and closing costs is one of the biggest barriers for most people looking to purchase a home, no matter what their income is. I have a client currently right now who really wanted grant assistance, but this particular client makes almost $200,000 and didn't necessarily have enough money saved up for down payment. And so this is why it's really important to connect with a real estate professional to help you customize your home ownership plan. I was able to get him connected to a loan officer who had a grant program specifically for higher income earners, because typically if you're a higher income earner, there aren't many programs out there for you to take advantage of. And so this program allowed him to get 5K towards the purchase of his home. Me being a negotiator that I am, I got him 3% seller assist or closing cost help from the seller. And so that knocked down his out of pocket. His out of pocket to come to close, cash that he has to bring is only $3,000. So he's purchasing a $255,000 home and only have to bring $3,000 to closing. And so all that to say, there are grant programs out there. There are loan programs that help you purchase your first home or even your second home. And your real estate agent should be negotiating on your behalf when it comes to asking the seller for some help towards your closing costs. Questions, comments, concerns?
I just wanted to address the house hack.
Yep.
I've been all on YouTube and know all about the house hack, and I think that was just amazing, Deonte. But with the house hack, you don't necessarily have to register your home.
Right.
but you do have to have a lease in place. You have to have that in place, but you don't have to register your home. So that's could be the upside to, if you decide anyone decides to do a house hack like that.
Yep. And I think a lot of people are doing it these days because, just the cost of living is tremendously increasing and wages aren't increasing at the same rate.
Absolutely.
But I'm an empty nester now, so I had to kick those people out. I was ready to be on my own.
Yeah.
But I am also considering possibly having another tenant. Just not sure yet. But I like my space to myself right now. It's quiet.
Yeah. But I think that's an option that most folks don't really talk about. Because as you said, Deonte, income is not necessarily going up, but everything else is going up. And so, if you are the type of person that could stand someone else being in your space, that can be an option. And just as he said, those people who lived in his home helped him to pay for his mortgage and other bills. So you're essentially living free to a certain extent. So, I don't think people talk about those things or those ideas enough. Good job.
Yeah, even I want to just comment on a house hack. And so I didn't buy my house just a house hack. I bought a house that was affordable to me, right? And so even if I didn't house hack, I could still afford it. So not saying that anyone would do this, but don't try to house hack off of the pretense that, I'll get a tenant to help offset costs. No, get a house based on your sole income.
Yeah, absolutely.
Right. Get a house based on yourself, even if you are partnered.
Yep.
Something can happen to one person's income.
So I have a question about what you just said. I'm sorry. My question is this. Me and my cousin was talking about buying a multi-family project or a multi-family house, right? With the potentials of, number one, he has higher credit score than me. And two, with our combined incomes, it would be more money, which means that we could get a better opportunity for more money to actually purchase a multifamily house. And then we had a similar idea. We wasn't calling it a house hack. We were just going to rent out certain parts of the house, like the basement and another room, to outsiders, not saying people that we know, but people that we did not know, because people I know they wouldn't pay. So we were thinking about doing that, and then again, like you said, using those people to help you pay off the mortgage. But instead of paying, me not paying, I was going to use them for an extra payment, because I was told by I think it was a class. I don't remember what the name of the class was, but the person inside there said that you can actually pay double your mortgage payments and like get ahead. And then when it comes down to the actual paying it off, you pay it off within or faster than that 5-year time frame. Does that make sense?
It makes a lot of sense. The only caveat or caution that I would, and again, everybody should do what's best for them in their situation. The only thing that I would push back on a little bit, and I'm not directing you, it's just more so just something to think about. I understand that you and your cousin are, combining your finances together to get pretty much access to more money. But also keep in mind that if that multifamily is not rented out to anybody, y'all still have a monthly mortgage based off of both of your incomes. And so again, if anything, God forbid, was to happen to one person's income, or just something happens to the other person, one of you guys is still on the hook for that full payment if there are no tenants. So just make sure you're getting into a situation where you can afford without the necessary use of having a tenant there, even though the end goal obviously is to have that tenant there. So just keep that in mind. So for example, both of you guys together might be able to afford a $500,000 multifamily. But if one of you go on the application, then you might only be able to afford, let's say, 250. But at minimum, that both of your incomes can cover that 250 versus two of you having to cover that $500K monthly payment. Does that make sense?
It does. So we thought about that too, and
Mhm.
what we did was we both have decent jobs. So he is the benefactor if anything was to happen to me, and I'm the benefactor if anything would happen to him. Minus kids. So that's how we were going to do it, and that's how we were going to play it out. Like it's my favorite cousin in the world, and so if anything happened, I would still have the payout from whatever 401 plans and whatever outfit he had set up. I would get that money to help pay off until I could find somebody that would actually cover his portion of that property.
Okay.
So we did think about that too. So I was right there with you when we thought about it. But the reason why is because we were thinking about going that route. That route is because everything is really, really expensive. And even with people with decent jobs, they're still saying that they're struggling to get by. So that's why I asked that question.
Yep. And so it sounds like you guys have talked about a plan. And so yeah, go with what works best for you guys. You guys have already thought about it and talked about some of the things that I suggested. So that's good. All right, so just again, some quick key steps. You want to make sure that you get connected with a professional. That way can come up with a customized plan for you. There are some barriers to home ownership. Some of the things that we talked about were credit worthiness as well as income, or just not having any money saved up. And so let's say if you're not ready to purchase a home now, it's really important for you to really start saving money. Doesn't mean that you have to have $30,000 saved in order to purchase a home. That's not what I'm saying at all. At minimum, this is a number that I want you guys to remember. I want you guys to have at least 3.5% saved of the purchase price of a home that you would want. And so, for example, if you're looking to purchase a $200,000 home, a down payment on a $200,000 home could be around $7,000 if you had an FHA loan. FHA requires their buyers, so this is a loan type, requires their buyers to put down 3.5% of the purchase price. If you had a conventional loan, conventional loans only require you to put down 3%. And so this down payment is a little less. If you are a veteran, a down payment is not necessary because you don't have to put down a down payment when you are a veteran using your VA loan. And so again, you just want to make sure that you have at least enough money saved for a down payment. So that's one of your out-of-pocket expenses. However, that can also be offset with a grant program. So let's say if there is a $10,000 grant program that you qualify for based off of your credit and your income, this down payment is now null and void because you can use that grant program towards your down payment. So again, you want to make sure you're saving money. And it's not just about saving money to get into the home, because what's really important for me is life after you close on the home. You still have to furnish the home if you don't currently have furniture. There might be things that come up along the line because now you're a homeowner that you have to take care of. So you can no longer go to your landlord asking them to fix things. You're the person that's fixing it, right? And so the saving piece is for the purchase as well as life after purchasing your home. You want to make sure that your agent, whoever you're working with, is connecting you with a good loan officer who will get you to the closing table. So, for example, when I started my home buying process, I was misinformed. I did an application through Chase Bank, which was one of the banks that I was banking with. So it's a big national bank, and I knew that I wanted to take advantage of some local grant programs or down payment assistance programs. But Chase Bank has no idea really about our local programs. It's important that you connect with a local loan officer who knows about the local programs. They know what paperwork is needed to submit for these grant programs. They know the type of houses that qualify for it. That's extremely important. All that to say, my agent ended up recommending me or referring me to one of her preferred lending partners, and that process was really smooth. Pre-approval versus pre-qualification. And so does anybody know the difference between these two? Between a pre-approval and a pre-qualification for a mortgage? All right, so think of a pre-approval as a more thorough check of your mortgage readiness, right? And so when I first started looking at different mortgage companies, I told you guys that I went through Chase Bank originally. They gave me a pre-qualification. So they pre-approved me or gave me a pre-qualification, let's say for up to $200,000. However, they didn't take a look at my assets. They didn't ask for any paperwork. And so they really didn't verify any of the information that I submitted in my application. It wasn't until my real estate agent at the time connected me with one of her lending partners. They did a more thorough check. They asked for my pay stubs. They asked for my W-2s. They wanted to make sure that what I was presenting on the mortgage application was truly matching with what's going on in real life. And so they issued me a pre-approval. So just think of a pre-approval as a more thorough letter confirming that you're ready to be approved for a mortgage. There are still some certain things that you would have to do after that pre-approval process. But before you go out house shopping, more than likely your agent is going to require you to get pre-approved. Once you have that pre-approval, this could be fun for some people. House shopping. It only took me a weekend to find the house that I wanted. I know I can be very indecisive. I've worked with some clients who've seen over 50 houses. I've worked with some clients who saw one house and decided that was the house for them. And then once you house shop and find the house, we'll submit the offer, right? There's a lot that happens prior to submitting an offer. A part of that is making sure that your credit is where it needs to be, making sure that your income is where it needs to be, creating a budget that's realistic for you and your lifestyle, as well as making sure that we're crossing all our dots and crossing all our T's and dotting our I's when it comes to making sure that we're best servicing you. And so I just want to go back to the money talk slide to give you this example. So I mentioned we're looking at a $200,000 home. One of the things that we're going to need is a down payment. We know that for FHA, that down payment is going to be around $7,000. However, before you even do a down payment on a home, one of the first things that you're going to do when you submit an offer, you're going to tell the seller how much money you're putting down for a deposit. So whenever you make an offer on a home, there is a deposit or a dollar amount that you must communicate to the seller, letting them know your financial interest in the property, right? And so in the state of Maryland, typically that deposit is 1% of the sales price. So we're looking at $2K. So if you're looking to purchase a $200,000 home, at minimum, you should have at least $2,000 saved. Why? Because if you don't get any down payment assistance, if you don't get any just any grant programs in general, you're required to put up at least 1%. And so again, you want to have at least $2,000 saved. Another upfront cost that you must consider if you're going to do an inspection on the property. An inspection is essentially a licensed professional going in to determine the condition of the home. So they're going to take a look at the major systems, so plumbing, HVAC, etc., to make sure that it's functioning properly before you move in. That typically is around $400. An appraisal. Does anybody know what an appraisal is?
I believe an appraisal is when someone come out and they tell you basically how much your house is worth.
Exactly, spot on. They tell you how much your house is worth. That's an upfront cost. So you want to have at least around $600 saved for an appraisal. So you're looking at $2,000 for a deposit, $400 for an inspection, around $600 for an appraisal. So right there, you're looking at $3,000. Okay. So when I purchased my home, I had around $10,000 saved up. Luckily, I was able to get $5,000 in grant money. and my total out of pocket or cash to close, including my deposit, was $4,000. So I was able to get into my home with $4,000 out of pocket. So closing costs on a $200,000 home, closing costs is around $12K. So I mentioned that I only paid $4K out of pocket. My agent was able to negotiate, I forget the exact dollar amount or the percentage. She was able to negotiate some closing costs for me. So it brought my out of pocket or cash to close down a bit. But again, on a $200,000 home, if you don't have any grant money or any seller closing assistance, you can anticipate around $12,000. So between your down payment, closing costs, and then upfront costs, you're looking at around $20,000 realistically to get into a home. That number sounds frightening, but again, this is why it's important to connect with the professional, because more often than not, you're not going to have to bring that money to the table, right? There are programs out there. There are things that we can do to negotiate on your behalf to get that number out of pocket. Okay. I mean, to get that money or cash to close out of pocket down a bit. Again, when I purchased my home, I only had to come to the table with about $4,000. That's because I got some grant money as well as my agent negotiated on my behalf for some seller assist. That's why for seller assist, I put a variable cost and then cash to close variable. It all depends on what's happening because everybody's situation is different. Now, your monthly mortgage today, because interest rates are around 6% for a $200,000 home, you're looking at around $1,500. And so that mortgage payment, it consists of the principal, so the total dollar amount that you owe, minus interest on the property. It includes property taxes and or ground rent. It includes your homeowner's insurance. If you don't put down 20% on a conventional loan, you have to have mortgage insurance. For FHA loans, they require you to always have mortgage insurance no matter how much money you put down. And then one thing that I left out is your interest. So there's really 5 components of a mortgage. I just left out the interest. Questions? All right, so I am going to skip over this slide, the 5 stages to a real estate transaction. I want to talk about what happens at closing. And so there are times where I've worked with buyers who didn't have to bring any money to closing because they received the assistance from different programs or the seller covered their closing costs. But let's say if you're in a situation where you do have to bring money to closing, you would wire those funds to the title company prior to closing. And so the title company, they are a third party. They are a service provider. You have the right as a buyer to choose whichever service providers you want. As agents, will make recommendations, but at the end of the day, you as the buyer have the right to decide who you want to work with. But essentially, you would wire any cash to close money to the title company. Obviously, you would sign documentation. You're going to obtain your keys, and we're going to celebrate, right? We're going to celebrate because it's a milestone. I want to get invited to the housewarming. I like to have fun and party, but most importantly, I want to celebrate your achievements. And as I mentioned earlier, here is my contact information. So I know it's 6:54. We've talked about a lot. I believe the session is going on until 7 p.m. And so we have about 6 minutes left to answer any questions you have. Here's my email address, my Instagram. If anyone is interested, I do a monthly newsletter where I share my monthly lifestyle experiences in the Baltimore area, as well as a real estate component. Typically, I talk about a new project or development that's happening in the Metro Baltimore area. If you're interested in that, you can drop me your email address and name in the chat. If not, that's perfectly okay as well. That's my cell number and my office location. But I am going to keep this up for a second and if there are other questions, I'm just going to sit here and see what you guys have.
Okay, so I have a question. Being as though that I did just file this chapter 7, realistically, how long would I have to wait to try to purchase a home? Because the young lady who did my bankruptcy, she told me that, within the next year or so that I would be eligible for me to, make a big purchase. Is that true? Or
I
it
think as long as you have your bankruptcy discharge date, I think the loan officer will base it off of that.
okay. So as for my homework would be to continue working on my credit and saving money.
Exactly.
Got it. So do you offer like any classes or anything like that? Like, I mean, you was really brief as to, you know, the things that we need to do to try to purchase a home. Do you have classes like for people that's trying to buy a house?
So we do home ownership classes. We also do a lot of one-on-ones. And the reason why we do a lot of one-on-ones is because I mentioned earlier, everyone's situation is different. So the classes are a bit more general to try to cater to everyone. However, for example, there might be someone who doesn't have a bankruptcy versus someone who does. Those are very different situations. And so that would be an opportunity for us to meet one-on-one to talk about a plan that you can essentially be on between now and when you get that bankruptcy discharge date.
Okay.
So if you're interested in that, I can if you don't mind, I can get your contact information from Melanie, or if you want to take my contact information and reach out to me outside of today's meeting. But I wanted to keep it general just because everybody's situation is different.
Okay, Melanie, is it possible for you to pass my information along to him?
Absolutely.
Okay.
Absolutely.
So much.
And I wanted to kind of drill down on a point that Deonte made, not being house poor. I know people on both sides of that coin, and that's one, being able to afford a house that is, whatever amount, that is great. That is awesome. But you still have to live and you still have other responsibilities. And I think that is something when people go to, look to buy a house, they don't really necessarily drill down and really think about it. Yeah, you might be able to afford something that's $200 and some $1,000, but how are you really going to live? Affordability is everything, and no one wants to be house poor. No one. So that's an essential thing that I kind of took away from this, something that I know myself and have practiced myself in my real estate ventures. But definitely it's exciting when your agent calls you and says you've been approved for whatever amount, right? You're like, oh man, I can, but no, that's not what we want to do. We want to be able to live life, get a nice house that's comfortable, that you feel good about, and have some money. That's the game. That's the name of the game. To have some money, not be house poor. Great point, Deonte.
Ayana, I see you have your hand raised.
Yeah. So about that. Okay, so this is what I understand because I watched my dad go through this process 15 years ago, and then they filed for bankruptcy, and then they lost the house, and then they brought a house that was, I guess, lower in some bad, good neighborhood. I guess that's what you would call it. And my father said to me, one of the hardest things was because they didn't plan for the future. They went by with the income that they had. And then my stepmother was a nurse. Well, she was an RN, and then she injured herself. So she lost her job. And then they were trying to live off of his income. And then the I guess, what is it called? Workers' compensation checks that she was getting. And so she got the settlement out, but then she can no longer do that type of work. and then the work she could do, it wasn't paid enough, I guess, in a sense, to cover the bills, that the lifestyle that they were already living, which is why I always tell people I have Beyonce Tays with my income, because that's realistic for most people. You know, we're taught to dream big, but then when you work into today's society, sometimes what you dreamed about as a kid isn't the money isn't what they said that it was going to be as an adult. So I feel that, I don't know. I'm on a fence here, and here's why I'm on a fence, because I want a house so that, you know, no matter what, my kids have something that they can always come back to. That's what I want. I want when my mom died, when my biological mother died, she left me with a bill. When my aunt died, she left the family with a bill. I don't want to leave my kids a bill. I want to leave them a will. And if I can do that, then I think that I've done something as a parent, as a mother.
I totally get that. I get that, Ayana. Holistically, I have, 3 kids of my own, and I get that leaving legacy behind is important, right? But we still have to, be cautious and just be real about our situation. Deonte, I think buying a house and paying $1,000 for a mortgage, Lord have mercy.
But how much are you going to be paying in today's society? I've looked at the low incomes of the houses.
It's different now. It's different. Interest rates are different. Everything is higher now. We know that, right? But you still have to, take your income, and look at it and say, listen, this is what I earned. This is what I can truly afford to pay towards a mortgage. A mortgage is 30 years. That's a long time. It's a long time. And so just like you just described with your family member, with your father, things can happen that we don't necessarily account for because we can't tell what the future is going to bring. So it's sensible to get something that you can afford and you're not struggling, regardless if the cousin move in or regardless if you get a $10,000 raise or whatever. It's essential that you look at what you have and say, okay, I know I can afford $1,000. I know I have a car payment. I know I have this and I know I have that. That's realistic. That might be your realistic story. I have a friend and he's a little older than me, and he bought this beautiful, y'all, it had a pool, it had 2 carports, it had, I think he had 5 or 6 bedrooms. It was gorgeous. Beyond, this is like a mini mansion, right? But at the end of the day, on paper, he could afford it, but he was house poor. He had to work 2 jobs. He had to work 2 jobs. In fact, he used the income of those 2 jobs, which was a red flag from the beginning, to qualify for that house. To me, that was saying you really can't afford it on one income. When he's older, and long story short, he lost it. It was a whole bunch of stuff that came behind that, but he lost it. But the point is that he didn't really look at his income, his one income, and say, you know what, let me get something that I can really afford, that my family can, appreciate living and, have a good time. And he wanted to go hard, and he went big and he went hard, and he also lost the house.
Yeah, I think that, and also the trajectory of life.
Absolutely.
Right? As you mentioned, most mortgages are going to be around 30 years.
Absolutely.
You pay it off sooner. And so when I bought my house, I was 30.
Yep.
Right. I'm 4 years in. And so we're living long, and hopefully I live until my house is paid off. Hopefully I pay it off before the 30 years. But essentially, by the time I'm 60, I should have a paid off home, ideally, if not before then.
Yep.
And so even if you start with a 30-year mortgage, you can make payments. Someone mentioned this earlier. I couldn't see who said it, but somebody mentioned it. If you made one extra payment, it knocks off.
That's it. X
amount of time, right? And so there are things that you can do to make sure that your house is paid off before that amortization date, and it can knock off the time frame which you're paying your home. That way, when you leave this earth, God forbid, we live as long as we can, that God willing, I'm sorry, that we live as long as we can, you can at least leave a home where your children, their children, only paying property taxes.
Yeah.
That's the goal. So you really have to think about it, holistically. And I saw that Celeste had her hand raised.
How you just answered it at the end. I was just going to ask, is it possible to purchase a house and pay it off earlier than 30 years? And if you did pay it off, what do you have to pay for outside of that? And you just said that property taxes. So
To the day you die, it's property taxes to the day you die.
I know, right? It's like we're the only country that have to pay taxes and never really own something fully. Like,
and then keep in mind, property taxes go up if your property value go up, or vice versa.
Goes down. Property value.
So that's just something to keep in mind as well, that I don't think we probably talk about enough. I'm trying to think, is there anything else?
Definitely on the road with the meetings, home girl. You is definitely on the road.
Thank you. Thank you. Yeah, I want everybody to be informed. If you're connected to affordable living and supportive services, I want you to be informed and get everything that comes along with it. And some people, and I'm going to resend this out, Deonte, for those who couldn't get on, it'll go out a couple of times. But some people just don't know that they're right there. They can possibly afford it. When you're talking about a 3-bedroom, right, in Baltimore City, you're probably talking about what, $1,200, at least $1,200, right? That could be your house that you own, a little less, as Deonte, put out there earlier, a little less in most cases. And so giving an idea and planting the seeds, to people who probably think, well, I'm not ready for this, that, and the third, you can be ready. And if you're not ready, we can help you get ready, get to that point where you are ready. It's essential, particularly for African Americans, that we, figure it out.
We are behind when it comes to home ownership.
Yes.
And a lot of times how other people, or people in general, they become wealthy or more wealthy is through real estate. And everybody's owning home, and that's building equity in your property. So somebody asked me what I sell. I'm not selling. I have a lot of equity in my house. And so,
can you explain equity a little bit? And I'm glad you mentioned it. I meant to circle back to that, but can you explain equity, please?
So think of equity is the difference between what you owe on the home and the estimated value based on market conditions of the home. So for example, in 2022, I had an appraisal done on my property. This was 2 years after I purchased my home. And so I purchased my home for $155,000. And in 2022, my home was valued at $236,000. So I had about, I'm not the best mathematician, I had about 80K in equity in my home. So that was the difference between what I owe versus the value of the property at that condition. And that can fluctuate over time. But that 80K, I can use that if I decide to do some things with it. I can use that to buy a second property or an investment, whatever that looks like. But that's what equity is.
Yes, I'm glad you mentioned that, because that's what I wanted to get at. Equity is an amazing thing, and I didn't really get into the equity. I've been in real estate for a while, but really in the last couple of years, having to have access to my equity has been like an amazing thing. Equity is like that cushion for if you want to get an investment property, or if you need to, do something is going on, you got to get the house fixed, whatever, right? It is that pool of money that is there. Yes, you have to pay it back. Don't get it twisted. You have to pay it back, but it is there. It is a cushion, and it is like the best thing ever when you get into home ownership. And it's good that when you do purchase a home, you have some equity in the home going in the door. And then over time, it builds, right? But it's just such an amazing, it's a freedom that I don't think as a community, we don't get access to enough, and we don't talk about enough.
Yeah. And if you do decide to sell your home, that equity is pretty much your profit that you get on the for the sale of the home.
Yeah.
So that's just something to think about. Celeste, you had another question?
Okay, yeah. So that's what I was about to say. Y'all just keep on answering all my questions. So basically, the equity is like a whole life insurance policy. Like you could pull out of it. It's more like, it's more like that, right? Like a savings account, kind of sorta, but not a savings account. Like you could, because with a whole life insurance policy, you could pull out of it, and they charge you interest for pulling out of it, but you can also put back in it. So is that like how equity is with a house?
It's a similar concept.
Mhm.
Okay.
Essentially, if you borrow against the equity of your home, it's a line of credit, right?
Mhm.
And then over time, you pay that back into, yeah.
Okay. Okay. Well, Deonte, it was a pleasure speaking with you today. I am going to be reaching out to you because I have like a nice little project that I'm working on, but I have to slow roll it. I got to stay in my lane, and I got to put one step at a time. But I find that your company and stuff might suit me. First off, I'm a big person off of personality and stuff like that, and you kind of like won me over. So, so
Look,
I'm
I
definitely
did win best personality in middle school for superlatives.
That's awesome. That is awesome. Deonte, thank you so much, for
You're
stopping
welcome.
by. And, this was a very thorough presentation. You laid, I'm pretty sure people are going to have questions, right? Even when I send it out. And I'm definitely going to direct them, over, to your way. You did an excellent job. Excellent job.
It's a lot more. It's a lot. Real
It
estate.
is. It is.
Yeah.
And it's really, you can't cover everything in one session.
Yeah. All righty. Well, you guys have a good night. Thank you for allowing me to join, and I will see you all around.
All right. Have a good one,
Yeah.
y'all. All right.